Hello, good afternoon and welcome to World Economy. My name is Blyden Okem. On World Economy today, Reserve Bank of India trims repo rate to lowest since 2022, and we begin from there. The Reserve Bank of India unanimously cut its key repo rate by 25 basis points to 5.25% at its December meeting, in line with expectations. The move brings total easing to 125 basis points since February, pushing the policy rate to its lowest level since July 2022, amid growing confidence in the softer inflation outlook. And now to Russia, as Russian ruble rises to near three-year high. The Russian ruble appreciated past 76 per US dollar in December, its strongest in nearly 3 years, amid highest interest rates by the Bank of Russia and the plunge in domestic demand for foreign currency due to the international isolation of Russia's economy. Mounting sanctions against the Russian central bank and key businesses prevented domestic market players from transacting in hard currency, driving their fixes by the Russian central bank to surge through the year. This was exemplified by the 96% plunge in ruble pair trading compared to before Russia's invasion of Ukraine, while data from the Central Bank of Russia indicated that nearly 60% of Russian exports were paid in rubles, compared to 14% in 2021. The latest sanction measure included sanctions against Lukoil and Rosneft, the country's largest oil companies, while the EU confirmed it will phase out Russian LNG by 2025. Meanwhile, the Central Bank of Russia said it will keep policy restrictive until the end of next year to curb inflationary pressures, also supporting the ruble. Still on currency, let's look at FX update as Polish zloty appreciates by 0.27%. Top currency gainers are Polish zloty at 0.27%, Australian dollar at 0.26%, British pound at 0.19%, Japanese yen gaining 0.15%, and the euro at 0.09%. The biggest losers are, or is, the Indian rupee at negative 0.27%. Meanwhile, the dollar index was little changed this afternoon. And now let's go to the market. First, the Euro-USD market. Afterwards, we'll look at the US dollar against African currencies and cryptocurrency market, the Euro-USD market. A price for the Euro-USD market stands at 1.16 US dollar for the euro, while a slight gain for the euro, 0.04% gain, and the pound against the US dollar at 1.33 US dollar per pound. The pound gaining 0.14%, the Australian dollar gaining 0.49% against the US dollar, the New Zealand dollar also gaining 0.33% against the US dollar. Meanwhile, the US dollar gaining just slightly, no significant change, 0.07% against the Japanese yen. The US dollar falling just slightly, negative 0.2% against the Chinese yuan, and also falling, negative 0.06% against the Swiss franc. And now to the US dollar against African currencies. Beginning with the state of the Naira, the US dollar against the Naira price level stands at 1,450 Naira to 1 US dollar. The dollar gaining 1.945 point today, a 0.13% appreciation, while multiplicity of observation indicate constraints in that regard. A US dollar against the South African rand, a price level indicates 16.9 rand equaling 1 US dollar. The rand being stronger than the US dollar falling by negative 0.4% against the South African rand. Similarly, looking at the Zambian kwacha, the US dollar battling it out against the Zambian kwacha, multiplicity of observation and the constraint that comes with it, 23 kwacha equaling 1 US dollar. The dollar falling just slightly, rather the dollar gaining 0.04% slightly against the kwacha. And looking at the state of Egyptian pound, US dollar against the Egyptian pound, a 47.5 Egyptian pound equaling 1 US dollar. And now to the cryptocurrency market. Let's talk about a cryptocurrency market, the price of Bitcoin. A Bitcoin price stands at 90,782 US dollar for 1 Bitcoin. A Bitcoin falling by 1,345 points this afternoon, or for the day, well, a decline for Bitcoin. Other cryptocurrencies also declining. Ether also are falling, but on a weekly basis, when you look at accumulation of activity, Ether has gained 2.72% from a weekly point of view, but today falling by 19.52 points at a price level of $3,114 US. On the other hand, Binance also falling today by 7.7 points, a negative 0.66%. On a weekly basis, Binance has gained 0.69%. Still on world economy, the Eurozone third quarter GDP is revised up to 0.3%. Eurozone GDP growth for the third quarter of 2025 was revised slightly higher to 0.3%, up from the preliminary estimates of 0.2% and above the previous quarter's 0.1% expansion. The upgrade was driven by a rebound in fixed investment, which rose 0.9% compared with a 1.7% decline in the second quarter, and stronger government spending of 0.7% versus a 0.4% in the previous quarter. Inventory changes contributed to an additional 0.1 percentage point to GDP. Household consumption growth eased slightly to 0.2% from 0.3%, while net exports subtracted 0.2 percentage points as import rose 1.3% and export grew more slowly at 0.7%. Among the region's largest economies, Spain and France led the expansion with growth of 0.6% and 0.5% respectively, followed by the Netherlands at 0.4% and Italy at a modest 0.1%. In contrast, Germany's economy remained stagnant during the quarter. And now to world food prices as prices fall for third month. The Food and Agriculture Organization Food Price Index fell 1.2% to 125.1 points in November 2025, marking a third consecutive monthly decline at a new low level since January. Sugar prices tumbled 5.9% to the lowest level since December 2020, amid expectations of ample global sugar supplies in the current season. Sugar production remains strong in Brazil's key southern growing regions, and India's 2025-2026 harvest started well. And dairy prices dropped 3.1% to September 2024 lows, with declines recorded across all major dairy commodities. And prices for vegetable oils went down 2.6% as lower quotation for palm, rapeseed and sunflower and oils are more than offset a slight increase in soy oil. Also, meat decrease 0.8%, continuing to be driven by lower pig and poultry prices. On the other hand, a cereal cost went up 1.8%, driven by a 2.5% increase in wheat, boosted by potential Chinese interest in supplies from the U.S., concerns over continuing hostilities in the Black Sea region, and expectations of reduced planting in Russia. And now let's look at the charts indicating World Food Price Index. The chart indicating World Food Price Index indicates that as an early part of the year, this year, we talked about opportunities that came with it. Our price had moved to 127 index points previously at this time about November last year, and began to increase, or rather slow down first before increasing. I went to a peak side of about 100, close to 130, a peak of 130 early part of this year, well, mid this year, and began to slow down at the middle of the year and began to slow down consistently for the past 3 months. The prices of commodities or food prices is downward and now relatively at 125 index points, a 3-month fall it has been for food prices across the world. And now to France, as France trade gap smallest in 10 months. France's trade deficit narrowed sharply to 3.9 billion euros in October 2025 from 6.4 billion euros in September, well below expectations of 6.8 billion euros and marking the smallest gap since December 2024. Exports slipped 0.5% month-on-month to 51.7 billion euros, weighed down by lower sales of agricultural and aquaculture products, mechanical and electronic equipment, and other industrial goods. By region, exports fell to the EU, a negative 4.9%, the Americas, a negative 6.4%, and Africa, a negative 1.8%, while shipments surged to the Middle East, a positive 65.5%, and Asia, a positive 6.2%. Meanwhile, imports declined at a faster rate of 4.6% to a 4-year low of 55.6 billion euros, with broad-based drops across most categories, including natural hydrocarbons, a negative 23.8%, agricultural products, negative 7.5%, transport equipment, negative 3.8%, and refined petroleum, negative 3.1%. Regionally, import decreased across all major partners: the EU, negative 3.6%, Africa, negative 2.1%, the Americas, negative 10.1%, Asia, a negative 4.5%, and the Middle East, negative 14.5%. And now to commodities as copper rallies on supply squeeze fears. Copper futures in the U.S. climbed to around $5.4 per pound today, hitting the highest level in more than 4 months amid ongoing supply disruption, while a large withdrawal of metal from LME warehouses earlier this week fueled speculation of a supply squeeze. Those moves were triggered by growing fears that the U.S. will announce levies on refined copper next year. Meanwhile, Ivanhoe Mines trimmed its production forecast for the Kamoa-Kakula operation in the Democratic Republic of Congo earlier this week, while Glencore cut its production targets for 2026. In contrast, Rio Tinto raised its 2025 production forecast, citing accelerating development at its Oyu Tolgoi mine in Mongolia. Copper prices also drew support from expectations that the U.S. Federal Reserve will deliver a 25 basis point rate cut next week, with 2 to 3 or more reduction anticipated next year. And now to the markets. The energy market first, afterwards the metals and agricultural commodities. The energy markets. Energy market begins with a price of crude oil, U.S. crude, mostly known as West Texas Intermediate crude, WTI crude. Price level stands at $59 per barrel, a downward by 0.112 points, a negative 0.19%. Brent, which represents Nigeria's price benchmark, price level stands at $63 per barrel, a downward 0.071 points, a negative 0.11%. Natural gas price gaining a 3.18%, gasoline a negative 0.1%, heating oil 1.94%, and we're talking about the price of coal. No significant change in the market. And now to the metal commodities. Metal commodity begin with the price of gold at $4,235 per ounce. A gold price gaining 26.85 points, a 0.64% appreciation, and silver price at $58 per ounce, are gaining 1.246 points, a 2.18% appreciation. Copper price also gaining 1.18% at a price level of $5.33 per pound. A steel price at 3,105 Chinese yuan per ton, falling by 13 points, a negative 0.42%. Lithium price also falling, a negative 0.8% at a price level of 93,250 Chinese yuan per ton. And now to agricultural markets. Agricultural market indicates the price of soybeans at $1,120 per bushel, gaining 0.52 points, a 0.05% appreciation, on wheat price at $540 per bushel, also falling on this regard a 0.58 points, a negative 0.11%, a lumber price at $536 per 1,000 board feet, upward by 5.5 points, a 1.04% appreciation. At the price of palm oil is at 4,152 Malaysian ringgit per ton, gaining 46 points in the afternoon market, a 1.12% appreciation. And now we'll go on a quick break, and when we're back, Africa's economy, not Africa now, world economy continues, but it would be looking at Africa's perspective as South Africa Forex Reserve posts historical high. Don't go anywhere. Welcome back. It's your world economy. My name is Vlad Nukem, and now to look at Africa's perspective as South Africa Forex Reserve posts historical highs. A gross foreign exchange reserve in South Africa rose to a new historical high of $72.07 billion in November 2025 from $71.55 billion in the previous month. Increases were recorded in gold reserve at $16.838 billion against $16.21 billion in October, and SDR holdings at $6.502 billion compared to $6.501 billion previously. On the other hand, foreign currency reserve posted a decrease of $48.728 billion compared to a $48.839 billion previously, while the forward position representing the central bank's unsettled or swap transaction fell to $0.552 billion in November from $0.602 billion, $0.602 in the preceding period, not in billions. And now to India. India cuts rates and raises GDP forecast. The Reserve Bank of India lowered its key repo rate by 25 basis points to 5.25% during its December 2025 meeting, in line with forecast amid confidence in a softer inflation outlook. The Reserve Bank of India has now cut rates by a total of 125 basis points since the beginning of the year, bringing the repo rate to its lowest level since July 2022. The central bank also announced open market operations worth 1 trillion Indian rupee, an equivalent of $11.14 billion to buy bonds this month, along with an additional $5 billion in forex swaps to inject liquidity into the banking system and speed up the transmission of lower rates. On the economic outlook, the Reserve Bank of India raised its GDP growth forecast for the financial year 2025-2026 to 7.3%, up from its earlier estimate of 6.8%. Meanwhile, headline inflation was revised down to 2% from 2.6%, keeping it well within the central bank's 2% to 6% target range. The Reserve Bank of India also cut the standing deposit facility and marginal standing facility rates by 25 basis points, bringing them to 5% and 5.5% respectively. Meanwhile, Philippines' inflation rate falls to 1.5%. The annual inflation rate in the Philippines eased to 1.5% in November 2025, down from 1.7% in October and below the expected 1.6%. This marks the lowest level in 3 months and remain well below the central bank's 2% to 4% target range. Price growth slowed for food and non-alcoholic beverages, reflecting softer annual increases in vegetables, tubers, plantains, cooking bananas, and pulse. Inflation also moderated for alcoholic beverages and tobacco, furnishing and household equipment, restaurants and accommodation services, as well as personal care and miscellaneous goods. In contrast, price pressures picked up for housing, water, electricity, gas, and other fuels, as well as transport. On a monthly basis, the Consumer Price Index grew 0.2%, following a 0.1% gain in October. Core inflation, which excludes certain food and energy items, eased to 2.4%, a 4-month low, from 2.5% in October. And now let's look at the charts indicating Philippines' inflation rate. The charts. A Philippines inflation rate, as we're talking about, is indicative of that last November. A price level for Philippines inflation rate at November last year was at 2.5%, went up to 2.89% and stayed at 2.9% at the beginning of this year. Began to slow down in February at 2.1%, 1.8%, 1.4% in April. May was a low point, went up a bit and dropped to a peak lowest point of July, 0.9%, before increasing up and down and currently at about 1.5%, indicating a slowdown in the cost of commodities in the country, in Philippines, and in terms of that currency, a bit stability in it. Finally, on world economy, a Jordan jobless rate edges up to 21.4% in the third quarter. Jordan's unemployment rate edged up to 21.4% in the third quarter of 2025, rising from 21.3% in the previous 2 quarters, which was its lowest level since first quarter 2020, but down 0.1 percentage point from 21.5% in the same quarter last year. The increase was attributed to a rise in female Jordanian unemployment, which reached 33.9%, up 0.6 percentage point from the third quarter of 2024 and 1.1 percentage point from the previous quarter. This coincided with graduates entering the labor force after completing their studies in the first half of the year. Meanwhile, male unemployment was 18%, down 0.3 points from the third quarter of 2024 and 0.1% from the second quarter of 2025. The share of unemployed Jordanians with secondary education or higher was 59.1%, while 40.3% had less than secondary education. The labor participation rate was 33.4%, down from 34.3% in the third quarter of 2024. Well, this is the most we looked upon on world economy. Thank you for being a part of it. My name is Blyden Lukem. We draw the curtain here. And thank you for watching.